I'm Melissa Lee, coming to you live from Studio B at the NASDAQ. On the desk tonight, Karen Finerman, Dan Nathan, Guy Adami, and sitting in as a guest trader tonight, Danny Moses, founder of Moses Ventures. We're going to get more at the end of the market's long winning streak and that dismal 30-year Treasury auction in just a minute. But we start off with the biggest drag on the NASDAQ 100 today. Tesla dropping more than 5%. Its worst decline since earnings last month. The stock nearly 30% off its highs of the year. The move coming after analysts at HSBC initiated coverage of the stock with a reduced rating, slapped it with a $146 price target. That's 30% lower than today's close. Add to that increased competition in China. Beijing-based Li Auto posting sales growth of a whopping 270% in its latest quarter. It also posted better profit margins than Tesla. The stock has well outperformed Elon Musk's company over the past year, but is China still an opportunity for Tesla? Or are the hurdles too high to jump at this point? There are many people who have been bearish of Tesla on this desk. Danny Moses, this is your number one short here.
Yeah, it still is. I was here July 18th, I think, right before they reported their second quarter. And the quarter was okay, but they did miss second quarter deliveries. And then third quarter, obviously, CFO stepped down prior to that and then missed those numbers. And I think now it's really become a show-me story in terms of it's an auto company. And I think people are going to start to lose patience over time here for what this company is going to be over time. And so I don't think it was down that much because of the downgrade. I think it was an excuse. A lot of stuff going out there, cybertruck delivery, et cetera. So I'm still short the name.
Isn't there something that we've learned from GM and Ford in their latest quarters, and that is the EV business is much tougher for even established OEMs? So why doesn't that bolster the Tesla story? They're the ones doing it and doing it profitably at this point.
The other side of that coin is they still make automobiles that people need to find. You're not walking into your local Tesla dealership and saying, here's 65 grand, give me my car. You still have to finance these things. And even Elon Musk talked about higher rates being a bit of a drag. And we can't do this, I understand. But if you were to back out that $103 print from December of 2022 and just looked at this move from October of 21 to where we are now, stock's down 50%. And it's not coincidental that it top ticked right before the Fed started to raise rates. So say what you want. Company now has cut prices 6-7 times. Margins are going to be impacted, and I think we're starting to see it now.
Yeah, I think that's really the central point. With part of their story was their margins were unlike anybody else's, and so it traded on this really high multiple. So if those margins compress, that multiple should also compress, and you get this sort of double whammy. And I mean, we're talking about, are we seeing the whole idea of the EV adoption slow down in general as well, and then just rates higher, multiples lower?
Yeah, it's interesting. So looking through this very detailed report from HSBC, I think this is the most important point. Almost half of our discounted cash flow valuation of Tesla comes from businesses that will not generate revenues and profits until 28 estimate. Okay.
Energy storage, solar.
Well, no. Well, those do. So here's the ones that are not generating revenue until 2028, It's this Optimus humanoids, it's robots, It's Dojo supercomputer, and it's fully self-driving. So those other ones are. And so I guess the point, and I think this is what kind of Danny's getting to, is if right now it's a car company, you know what I mean? And it's fine that if people believe in all those other advanced technologies, and Elon is the one to push those forward, and he probably is the one to come up with the best robot or come up with the best supercomputer or whatever. But right now, if you were paying $600 billion, or you were paying, to Guy's point, in late 2021, $1.2 trillion in market cap for that, there's a lot of things that have to go really well, and most of which, the adoption for electric vehicles. Here, you need to maintain share and grow share and make it more profitable, but then you need to be able to do what they hope to do in China. And so right now, just the competition and the pressure on pricing and their inability to kind of create the sort of elasticity that they thought they could do by the 6 price cuts over the last, call it, year and a half now, it's not materializing, And so to me, I still think it's, overpriced. I don't have a position in it. Every time we see Danny on the show, he comes and says, listen, I do think it's a short, because right now, now, it is just an EV car company with a lot of competition.
Just for the record, I was planning to be on this show prior to Tesla being down, prior to the market being down. I tend to find myself on here from time to time when that does occur. But I do think, like I said, I do think for now it looks like an auto company to me until all these things are on the come. So.
Let me ask you, how long have you been short Tesla?
Off and on for 5 years, 6 years.
Have you made money overall?
I think I'm very close at this point. I mean, I was down this year. It had a nice move down. I didn't take enough off the tip.
This is the time.
This is it.
This is it
to me because I don't know why it's the Magnificent Seven anymore. So they're out. As far as I'm concerned, you look at the 7 companies that we talk about, I think it's SEAL Team 6 on Veterans Day.
Well, that's fitting.
SEAL Team 6.
SEAL Team 6. I think they're out because it's an auto company. We are what we thought they were.
See, Danny, that's why we have money. Comes up with clever things.
Right.
Who's Dan's favorite band? Do you know this off the top of your head?
His favorite band.
You should know this because we played the music.
All right, his second favorite.
Pearl Jam.
Pearl Jam. It's Somebody's in Your Ear. And before we started, we heard the song Black, which is, by the way, probably the only song you need to listen to. I mentioned that because Gary Black, who was on this show
Yes, he was on
a couple weeks ago. See what I did there? That's how I tie it all together. He put out a tweet talking about how if you back out Dojo and Optimus and FSD, you get $90 a share in terms of the value of the EV business. By contrast, they have it valued at $300. This chasm continues to grow in terms of where people are. And my sense is a guy like Dan Ives, who's been, the axe in the space, he's going to sort of come out with a bull case in terms. It would be great if we could have him on and talk about Tesla.